When you're comparing a raw kilowatt hour or megawatt hour basis, almost everywhere on planet Earth, the cheapest option is a renewable.
Hyperscalers happening today. Natural gas specifically seem to be sort of de facto response from a lot of these developers and hyperscalers.
One technology that we're sleeping on a bit at the utility level is the power of batteries as a grid resource, but also behind the meter resource.
Batteries, for all of their, low costs and great promise, have not necessarily broken through at scale for utilities.
One of the core questions for the US is how do we re-engineer our systems and processes to optimize for moving fast so that we can power these technologies that are moving us into leadership in tech in the 21st century.
Solar is now the cheapest source of electricity in history. Wind is close behind, and battery costs have collapsed faster than almost anyone predicted. And yet, many utilities are still planning like energy economics are stuck in the early 2000s. Today, we're getting to the bottom of why. Welcome to Power Perspectives. I'm Kinsey Grant Baker, and today we're talking economics. Not sustainability, not politics, not even necessarily the laws of physics, but simple, reliable economics. Because the renewable revolution has quietly become one of the most significant cost stories in the history of energy infrastructure. And that has positioned renewables as a potential key to meeting this historic moment of spiking demand. The utilities and policymakers who figure that out first could have a serious competitive and regulatory advantage over those who don't, especially if they start to move at a new speed set forth by this quick-moving renewable tech space. So who wins and how? My guest today has spent years tracking exactly that shift and figuring out that question's answer. Ramez Naam is a climate and clean energy investor, technologist, author, and one of today's most rigorous thinkers, I would argue, about the declining cost curves of solar, wind, batteries, and EVs, and what those cost curves actually mean for how we build and run the grid. Ramez, welcome to Power Perspectives. How are you today?
Kinsey, it's a pleasure to be here. I'm doing well. Thank you.
Wonderful. I'm glad to have you. We are big fans of your work here at Energy Central. I hope that you know that in the outreach that we have done to you. But for anybody who is in our audience who might not be a big fan of yours just yet, I'm sure this will change their mind. I would love if you could tell us just a little bit more about, your background. For those who haven't checked out your work yet, can you just introduce yourself and tell us a little bit more about what you're up to these days?
Absolutely. I'm a computer scientist by training. So I spent 15 years in tech, a lot of it in big tech. And I got very interested in energy, food, water, natural resources, sustainability around 2010. And I decided to write what would become my third book about innovating to provide more abundance for everyone on planet Earth with less impact on the planet. And as part of that, I looked into energy specifically, obviously a core technology. And I found this exponential cost decline in solar. I was not the very first to observe it, but what was unique was I came from tech. And in tech, we have what we call Moore's Law, which is doubling of price performance of compute every 18 months. We're seeing that in AI now. And when I looked at the cost of solar, it looked incredibly similar, not quite the same pace, but exponential decline in cost. And the same with batteries. And later on became clear that was happening with wind and EVs as well. So that led to me becoming a forecaster, a speaker, an advisor to many companies, and an investor in startups in the space.
Wonderful. And I love that so much of the work that you are doing that is transformative and impactful today is really centered on this finding, this reality that was right there written out for anybody to figure out, right? But I think that it sets us up for a good, context of this conversation to dig into how that maybe has shifted. I'm curious to hear sort of what the reality is today now that you've been working in this space for a while. Your writing has obviously emphasized a lot of these plunging costs when we're talking about solar, the reliability when we're talking about wind, battery prices, all of these exciting topics. Could you do us a favor and potentially sum up the, let's call it, economic reality of renewables in a couple sentences for today? What does that reality look like?
Yeah, that when you're comparing on just a raw kilowatt hour, megawatt hour basis, almost everywhere on planet Earth, the cheapest option is a renewable. And in the US, typically that's solar. In Europe, it might be a little bit different, but most of the world, it is solar. Now, that doesn't mean that you have 24/7. It's really a fuel-saving technology. It allows you to burn less gas or less coal in some cases. Batteries are plunging in price as well. And so we see that in ERCOT now, with batteries providing, a quarter or a third of the evening peak. And that is really driven by economics. In 2010, when I started telling this story that renewables were going to plunge in price, it was difficult for people to accept it. Around 2015, we had the first real crossover event, and now it's just de rigueur. And one way to see that is that in nameplate capacity, renewables are something like 93% of what's being built. In total energy generation, last year, 2025, the growth of renewables in generation, not nameplate capacity, exceeded globally the growth of electricity demand. And solar was about two-thirds of that. And solar is doubling every 3 years in its pace of deployment. So the world is going very rapidly in this direction, and more rapidly each year.
Yeah, this is an interesting point here when we're talking about all of this growth, and especially when we're talking about this growth on the global scale of solar as a share of generating capacity across all of our power systems, across all of the world. There is still a part of me that wonders how come this is still a question. I think a lot of this has to do with what we're seeing with hyperscalers happening today. So much of their concern is speed to power when they are having the conversation around speed to power, whether it's, a hyperscale, like a big tech company, a data center developer, they often are falling back, I think, on behind the meter natural gas. Tell me a little bit more about why solar is not a bigger part of that equation right now, or why gas and natural gas specifically seem to be sort of the de facto response from a lot of these developers and hyperscalers when they're considering how quickly they can get these huge projects online.
It's really about the shape of the demand curve. Across the U.S., we see, and in most places, peak demand happens in late afternoon hours on hot summer days or into the early evening, and that lines up pretty well with solar generation, both by hour of day and by season. And with batteries now getting cheap enough to shift 2 to 4 hours of generation, that gets into that evening curve. There's some great graphs of, I think Ember called it putting solar where the sun don't shine. That now we have a substantial fraction of solar generation going into hours after sunset. But that's because of how we use energy. People are asleep at night. Factories don't always run 3 shifts. Air conditioning is a big draw. Data centers are different. Something that people don't appreciate is that the electricity consumption of AI data centers is only 5 or 10% of the overall fraction of AI. The bulk of it is CapEx, and the bulk of that is CapEx on the chips themselves. So if you've bought a chip that costs, 7 or 8 times what your power will cost, you got a data center that makes that, go up to 10 to 20, you want to run that 24/7. And so critics of renewables have always pointed out to this issue of 24/7 as a core limitation. It hasn't been such an issue for the grid overall because solar's been small. And again, it lined up with that peak. But when you're building a data center, it's not just time to power, it's time to 24/7, 365 power.
And this idea of getting to that 24/7, 365 power, I would love to hear your perspective on the process, the speed. What does that entail? I know that you have pointed out before the difference between startup speed, tech speed, and then utility speed. Tell me a little bit more about how that factors into the conversation of renewables playing a part in the AI data center build out.
Yeah, I think it factors into renewables and the grid overall, and transmission and distribution as well. Look, in the US, uh, for the last several decades, every decade we've had slower electricity load growth. We hit zero per capita electricity load growth around 2000, and it started to go negative on a per capita basis. That's not how it always was. In the 50s, we had 10% annual load growth. And so we had institutions built to move that rapidly. But we haven't had to do that. So I think we've had a number of things happen. We've had more regulation has appeared. Permitting has gotten harder. That's put a brake on how fast we can build out new generation or new T&D. And at the same time, our institutions have just not had to build at that speed. So I think what we're looking at now is seen as a stressor by utilities, but it's also a huge opportunity. We are seeing the fastest load growth we've had in decades, driven by AI data centers, but also electrification of industry and eventually electric vehicles. Utilities are just not in a mindset of how to address that, but fundamentally, it's selling more of the product. And so, to me, one of the core questions for the U.S. really, and for other parts of the world, is how do we re-engineer our systems and processes, everything from regulation to the utility business model to utility incentive structures, to optimize for moving fast so that we can power these technologies that are moving us into leadership in tech in the 21st century.
Yeah, absolutely. And I want to dig into that aggressively. I've got some questions written down here that I want to get to. But before we do, just so we make sure we kind of cover all of our bases, from a cost perspective specifically, what makes renewables the best option in your perspective for powering these hyperscale projects? Can you tell me a little bit more about how cost might factor into the decision to, pursue solar, for example, instead of natural gas if we can get these systems to the point where we have 24/7, 365 power?
So we just see this incredible price plunge in solar. We think that by 2030, the cost of solar in the Midwest in the US will be something like $20 a megawatt hour, which is below the fuel cost of gas. And even when you add in batteries at the incredible pace that battery costs are dropping, and there are new technologies like sodium ion that get rid of even the need for lithium that will drive costs further down. We're talking about 24/7 power in a sunny place with solar and batteries, maybe at $50 a megawatt hour in the US, which is basically on par with uh, the generation cost of a combined cycle natural gas plant, and is lower than industrial power costs, and is half probably of what these data centers are paying for behind the meter gas generation. We already have an example in the UAE. They're currently building what they call a 1 gigawatt baseload solar power plant. What it really is, it's 5 gigawatts of solar, 17 gigawatt hours of batteries. It's absolutely enormous in its scale. It will really generate most of the time more than a gigawatt, but a gigawatt is sort of the minimum. And when you do the math on that, it's probably it's less than $100 a megawatt hour is the combined cost of that, which again is on par with natural gas behind the meter in the Middle East or the U.S. Uh, the other thing I want to point out is, look, when I talk about solar, I just want to be realistic. Like powering the Northeast or Canada or Northern Europe with solar is really hard. Wind can play a big role. We need a mix of different power sources to power places that are not sunny all the time. And we can't assume that people or businesses will just move. But we have yet to build the vast majority of these AI data centers. And in situations where you can move demand to where the energy is, you have all this flexibility. So I think our rational process would actually see a huge amount of data center capacity built out in the US Southwest, in the US, for example, or in very sunny countries to take advantage of that continual price decline in solar and batteries. One last point I'll make is that data centers, which are the fastest load growth that we have in the US and in some ways globally, are becoming incredibly unpopular. And a lot of that is myth, not reality. But there are these perceptions, and some of it is reality. There are these perceptions of pollution and behind the meter gas. If you look at the Colossus data center that SAI has, is exceeding, the nitrous oxide emissions that we would expect from a combined cycle plant of similar size. It's probably exceeding the particulate emissions. It's a perception of water. Well, guess what? The overwhelming majority of the water use of data centers is actually power gen, which solar and batteries basically don't use. So I think we have to think about that as well, as if we want to keep building data centers, we have to address the complaints and concerns of people in those communities. And we have polling that shows that powering those data centers with the renewables reduces opposition substantially.
And one bad apple, right? I think that it's important to have the conversations about the impacts of some of these, more negative or and perceived more nefarious kind of stories when we're talking about data centers and NIMBYism and all of this, because this is a huge factor that a lot of utility professionals too are up against. It's the one thing that they might have, in common in terms of interests and priorities with these data center developers. I think that we, now can use these sort of baseline ideas that you have laid out for us here to have a really thoughtful conversation about what you mentioned before, about the ways that we can get to that speed element that you're mentioning a few minutes back. In terms of the processes, the institutions that are required to get to those speeds again, I would love to talk about what needs to change. So, what do you think is really the kind of core thesis or really the crux of the challenge for renewables, knowing that the case is very compelling for renewables and hyperscalers to combine their powers, right? What do you think some of the core challenges are there in terms of, regulation, permitting, market design? I would love to hear a little bit more of your perspective there when it comes to some of these more process-oriented elements of the energy reality that we have today, potentially serving as roadblocks to renewables playing a bigger role in the hyperscale build out.
If you just look at time to build, for a medium-sized solar plant or solar and battery plant, it's maybe, 12, 18 months to get it going, and permitting is usually fairly easy. But for a data center wanting to get into the large load interconnection queue, it might now be 5 to 7 years. And so a lot of that is about T&D, is bringing the solar, or whatever the grid is powered by, to the site. And so that's like the number one area that I'd focus on. There's a second area though that I also think is worth pointing out, which is for gigawatt scale data centers. We don't have a lot of examples of renewable power plants on that scale. And so then you start to get into real permitting challenges, and also challenges that the developers can potentially address themselves, as putting together large parcels of land to do this sort of thing. So if you could make a behind the meter solar and battery data center, but you have to acquire a large amount of land in order to do that, and that's the complexity. When we get to T&D, which is really the place where things move the slowest today, I think, we have process issues, we have permitting issues, we have laws that affect how quickly we can do that. We have pushback from locals in some cases, but the utilities also need to, or have an opportunity to, improve the interconnection queue process itself, to improve the speed of the studies, to create incentives to keep those interconnection queues clean, full of real projects that are actually going to get built, not phantom speculative projects. Make it, I see movement in this direction, make it cost something meaningful to get a position in the queue, so that you have fewer of these phantom projects. And in terms of the studies, the studies can take quite a long time today. I think it's sort of ironic or funny, or it's an opportunity that we see an increased need to do studies because of AI. And AI itself is a potentially incredibly powerful technology to speed up that analysis. And so you see some interesting things happening now. Microsoft has talked a little bit about some research they're doing about using AI models to speed up things like doing models of large load and large gen. I think you'll see more and more of that start to come to market. Uh, then the question is, how rapidly do utilities start to adopt that? And one of my concerns, we go up to the highest level, I believe that everything can be fixed if you have the right incentives. And I'm not sure today that the incentives for the utility business model, for utility executives, or for utility employees really optimize for speed. Utilities are regulated, vertically integrated utilities, local monopolies are rewarded on capex. So in some sense, there's a little bit of a benefit to speed. You deploy more, you get to earn a return on that new capex, but there's nothing explicit. And so if I were a utility commission, I would be talking about, hey, we will create some structure in the rate base that rewards the utility for bringing projects to market to meet demand more rapidly. Or we'd create some way for customers, the AI data centers, for instance, to be able to, provide a reward to the utility if they can bring things to market faster. That's doesn't fit into how utility commissions or rate structures work today. But I believe if we had those incentives and those incentives rippled down to compensation for the people inside of utilities, we'd start to see things move faster.
So the question becomes to me then, how do we get there? If you had the magic wand to wave, I'm curious what you think would move the needle most in rejiggering some of these incentive systems and business models to better serve that need for speed, if you will.
I think we have to see this as a win-win situation. Utilities work with their utility commissions. In reality, most of the time, utility outguns its regulator. Utilities just have, more staff, more analysis, more ability to present a compelling case than the utility commission does. And if I were a utility exec, I would be thinking about, look, people want our product. They want electrons. They are defecting. They're saying you can't deliver what I want fast enough, so I'm going to build behind the meter gas. We would like them not to defect. Okay, well, how do we move faster? Let's create the incentives for us to move faster. Let's go talk to our utility commission and say, here are some ideas. We think you should put us on the hook and or reward us or allow our customers to reward us for moving fast. That's the way to get back to the relative pace we were at in the 50s or 60s. Obviously, there's a host of technical issues and more detailed policy issues to solve beneath that. But that to me is really the first step.
I think that makes a lot of sense. And on the note of technology too, this is another big element that requires solving. Do you feel that we currently have the technology we need to serve this version of reality, or what kind of work needs to be done to get to that point?
So in some cases, yes, in some cases, no. So I think one technology that we're sleeping on a bit at the utility level is the power of batteries uh, as a grid resource, but also behind the meter resource. So we have this concept that's being advanced in ERCOT now of interruptible load, where a data center can have large behind the meter battery deployment that reduces its need to draw on transmission at peak hours. Right. So if we think about this, why like T&D is the bottleneck for these large loads. What do we need T&D for? Well, we build it out for peak, for a few hours out of the day. Let's say 4 hours out of the day. And in lots of markets, in nearly every market, you can see that not only is generation less utilized in the middle of the night, but the transmission is as well. And so if a customer says, look, there's a 10 gigawatt swing between midnight and 6 p.m., let's say, between the trough and the peak, I'm going to build out batteries. I'm going to draw from transmission that's underutilized when demand is low, fill up the battery, and then I won't need to touch transmission during the peak hours. So you utility do not need to build out any additional T&D. That's incredible. That actually increases utilization of the current grid and has potential to reduce costs for everyone. We are just at the beginning of starting to think about how to incorporate that in regulation. So I think that's one to advance. And there that the tech is there. Let's figure out how to best utilize it. I think, on the other two aspects, I'd say one is doing the studies faster. I think that tech is starting to be there. I think in this year, you will see a lot of, work in AI to accelerate the process of modeling and doing studies. The real challenge is the physical poles and wires. That's the place where technology has not advanced. You do see some interesting things. We've seen some demos from China of, humanoid robot linemen, essentially. But I think, this is an area where there's a need for potential advances. Generation, if you look at costs, in the US, generation costs as a fraction of total utility spending or as a fraction of utility bills have dropped over the last 20 years due to a combination of cheap gas and renewables. And T&D costs have gone up. Most of that is distribution, actually. It's the last mile, the last few miles. So if I were, uh, an institute in the utility space, for instance, I'd be thinking about how do I, uh, seed innovative ideas of how to build T&D and especially distribution faster. I'd be thinking about prizes. I'd be thinking about pilot programs with startups. I'd be thinking about investing in startups in this space because it's I think utility professionals probably get this. Most of America doesn't get this, that the holdup on electricity in the US are the poles and wires. So how do we make that move faster? Let's spur the technology. Let's use AI to look through every regulation that exists in the community and identify the ones that are most hindering us. And let's create those incentives as well.
Out of curiosity, beyond, humanoid robot linemen, are there any other T&D technologies that you think are interesting or worth tracking, we could say?
Well, I'm actually not the biggest fan of humanoids. I'm a fan of automation. I think we could mechanize more of the deployment of TND, and I think that really does become one of the core things that we can do. Um, I don't think we're going to get to wireless transmission. There's lots of issues with that. We talked about that. Undergrounding is expensive, though I think that we shouldn't totally rule that out. And whether or not there could be advances in how cheaply we can underground stuff to put the lines in place. It has benefits with reliability and so on, but right now the cost is prohibitive. But I'd be thinking seriously about how do we put up the poles. I think it's probably not a humanoid doing that, but it might be an automated machine that moves much faster than it is right now. How do we string those wires? Are there heavy lift drones that can take a wire from one pole to another and speed that? Uh, those are the types of things I'd be looking at.
You mentioned when we first started talking about the tech aspects of this conversation, the importance and the role that could be played by batteries and storage. So often on this show, I have had conversations with folks who express something similar, that batteries represent this huge opportunity to make the most of a grid that is under a lot of stress and pressure right now. Knowing that a lot of this T&D kind of technology might be a bit of a ways off, batteries could be the bridge to get us there, if you will. Why does it seem still that batteries, for all of their, low costs and great promise, have not necessarily broken through at scale for utilities? Can you tell me a little bit more about that dynamic?
Absolutely. I mean, batteries are where solar was 10 years ago. The price trend is clear. Everyone, I think, reflexively thinks the cost declines will drop. I don't think they will. I would expect that over the next 5 to 10 years, the cost of solar will drop in half again. The cost of batteries could drop by a factor of 3 or 4. And so I think when we're doing, utility planning, IRPs, and so on, people are not taking that into account if they're building centrally. Uh, let me give you some concrete examples of that. In the US today, if you're deploying batteries, maybe you're paying about $100 a kilowatt hour at best. It might be higher than that. It often is, and I'm not counting, all of the balance of plant and labor and so on. In China, we have, uh, you know, solicitations we've seen, signed deals where containerized batteries with the inverter show up on site at less than $50 a kilowatt hour. It's actually remarkable. Now, the floor price of lithium ion batteries, just based on the ingredients that go into them, based on the lithium in large part, but also nickel, cobalt, depending on exactly what the chemistry is, that is maybe $25 a kilowatt hour, but there's only so low you can drop unless you drop the raw materials cost further. Sodium is sort of in the very similar in the periodic table to lithium in its chemical properties. Sodium ion batteries are the probably the biggest real world new technology in energy storage. They really appeared on the market last year. They're being sold commercially now by Chinese companies. the raw materials cost of a sodium ion battery can go as low as something like $4 a kilowatt hour. So like 1/5 or 1/6 of lithium ion. So we have huge potential future cost reductions. And I think uh, utility planners are not taking that into account. And that's one of the large issues. I want to be clear, solving multi-day storage is still really, really hard. But at these numbers, the day-night cycle looks sort of economically feasible, almost right now. Like in China, the day-night cycle looks pretty much economically feasible, and if not now, in the next 3 to 5 years. And so I would be thinking about that heavily as a utility, and then I'd be looking like, look at your major transmission lines, look at your most loaded distribution lines, and what is the gap between the trough and the peak? Because that's your opportunity space. That's the energy with batteries that you can deliver to customers with no new T&D.
I think it brings up this interesting question for me that I feel like have asked in several different, shapes and forms throughout this conversation. But it's really okay, and then what? When we're talking about the promise for something like, batteries in the example that you were just giving here, the impact that it could have on utility planning, on the IRPs that we're seeing, what would it take to convince some of these utility leaders and potentially listeners today who are at utilities that they need to rethink what their strategy looks like? They need to rethink what planning looks like to better incorporate some of these renewables, knowing the cost story that we've talked about today, knowing the speed story that we've talked about today. What do you think, moves the needle, if you will, in how planning might shift?
Well, look, one thing I'd like to see, and I think utility commissions could push this, is every IRP should contain a scenario for what if solar, battery, wind cost declines continue at the same pace. And when you look at IRPs today, the cost assumptions are usually, often they're just outdated. That by the time the IRP is finished, we have examples of solar and batteries below the cost that the IRP projects for 5 years out. So I would say, like, utility, like, put down what you think is going to happen, but I want a scenario in every IRP that says, if the learning rates continue, if the deployment rates continue, here's what solar and batteries cost. Show me that and what you would build for that. And if that were mandatory in every IRP, I think you'd see utility commissions start to say, well, look, you've said here that if these cost declines continue, which they have for the last 15, 20 years, that actually what you should do is not build any more gas and build more solar and batteries. So why isn't that the default plan? So just forcing people to look at those numbers. That's what I tell people all the time is, look, you don't have to believe that these cost declines will continue, even though they have fairly consistently with some hiccups, some bumps, but you should at least do the math. You should at least do the projection and say, what if the cost reductions continue exactly as they have, and we see, a halving of the cost of solar, a reduction in the cost of storage by a factor of 4, what would be the rational plan? And at least have that as your backup plan. And then 2, I'd put out, a plan for what's on your radar. How do you track whether or not this is happening? And if you put out an IRP and you say, look, here's what the projections say if the cost declines continue, but we don't think they will. So we're going to go with this model where the cost declines have stopped. All right, 12 months later, I want to checkmate, where I want to see what has happened on the costs. And if the costs have continued to decline, then maybe your plan ought to change.
I think that makes a lot of sense. A lot of this too is rooted in the very impossible task that utilities have of doing their best to predict the future. I understand that you're writing, and then a lot of smart people who have talked about this too. They're writing sort of centers on this idea that clean energy can be a huge disruptor to fossil fuels. With this idea of disruption in mind, I'm curious what the next disruptor looks like. If you have any thoughts, any perspectives as utilities are trying to think about how they can plan for a future that they aren't exactly sure what it might entail. Any perspective to share on what the next disruptor might look like?
I can tell you some crazy ideas. We can talk about fusion. I think fusion is actually about to arrive. Will it be cheap? I don't know. And I think that's a big open question. We could talk about space-based power. I just invested in a company that does floating AI data centers using a wave energy around Antarctica. Those are lots of crazy things, and you should prepare for them to some extent, but they are still wild cards. The the craziest disruptor that's very likely is that the cost declines of the existing technologies continue. And that we, if you look at the media, if you read, like news stories, we over index on here's this spectacular breakthrough possibility. Here's this, thing we can talk about in a concrete but not economic sense. And we under index in here's the cost decline. People used to tell me we need a breakthrough in batteries, right? But what's happened is over the last 35 years, a 99% reduction in the cost of lithium ion batteries. And that was not appreciated or expected. So it's sort of the path of continuation of what we've been doing. And compared to utility plants, it's a massive technology breakthrough.
I think you could argue batteries are the breakthrough themselves, right? When we're looking at a transformation at that scale, it really is. It's wild, and I'm excited to see if these big bets pan out. But I think it really to me highlights the importance of a conversation like this to talk about yes how cool some of this technology is, but also the realities of technology that 20, 30 years ago was the cool hot new thing. Now let's have a real honest conversation about the realities and what it might mean for utility planning. So this has just been really, really wonderful. I have learned so much. I have had such a blast. I would love to finish the conversation with a quick lightning round. This
Okay.
is meant to be a quick rapid fire section just to close us out here. So I've got 3 questions for you. If you could answer with just a couple words or a sentence or two, that would be wonderful. First question. What is the most common misconception that you find yourself running into and potentially correcting when it comes to your area of expertise?
That the cost declines have stopped, that costs are static.
All right. Second question for you. Any under the radar sort of tech developments that you think might surprise people in terms of maybe how much impact they could have on a conversation like this over the next 5 years or decade or so?
There's a couple, net power, like combined cycle natural gas that inherently has carbon capture, I think is a fascinating technology. Most fusion startups, I think, look kind of expensive, but there are a couple like Helion here in the Seattle area that if it works, will have sort of modular 50 megawatt and up power plants that are clean 24/7 and cheap. And then geothermal, Fervo IPO'd last week. So I don't know if people are sleeping on it. Biggest clean energy IPO in history. But geothermal is another clean baseload power source that now we think we can apply to a much larger area of the US.
All right. I love it. And my final question for you here is there a policy reform that you wish you could snap your fingers and make that would make all of the hypotheticals we've talked about in this conversation happen? What would be your number one?
Permitting reform at every level, federal, state, and local, especially for transmission, but also for solar and wind.
All right. I think a lot of people listening would probably agree with you. Thank you so much for joining us today. This has just been such a lovely conversation, and I am eager to get it published and out into the world. I'm excited to see how people interact with it and what everybody listening thinks about what we have talked about today. So thank you so much for joining me. I really, really appreciate your time.
Kinsey, thanks so much for having me and for your great preparation.
Of course. And thank you to all of you for listening to another episode of Power Perspectives from Energy Central. I'm Kinsey Grant Baker, and I'll see you next time. What are you doing on June 23rd? If you're a utility professional who wants to 1, meet and network with other big thinkers, and 2, get leadership perspectives on the future of energy business strategy from affordability to AI, there's only one place to be. Energy Central is hosting a happy hour in Washington, D.C. on the evening of June 23rd. You might ask why, and it's because we think the very future of our energy industry depends a whole lot on how things shake out in Data Center Alley. And we think it's high time that the smartest people solving the biggest utility challenges got together to share some good ideas. So join us on June 23rd in DC for connections, conversations, and cocktails in partnership with our friends at IFS Copperleaf. Save your spot by RSVPing at the link in the show notes, and we'll see you there.